Let's bring in market watcher Eddie Ghabour for more on this. Eddie, great to see you. Dow's down 765 points. This is a pretty steep sell-off spurred by that news coming out of China that one of its big property developers could possibly default, the concern that maybe some U.S. banks could be holding that debt too. Your thoughts on what we're seeing and if this sell-off is the start of something more severe?
So we're not looking at today as a start of a more severe sell-off. We do think we will ultimately see a pretty big sell-off, but looking more towards the end of this year and the first half of next year as we start to really see GDP decelerating. Look, so a lot of things are going to have to change, in my opinion, to change my opinion on this by the dip moment, because the bond market actually is acting fine considering this news of Evergrande. So it tells us right now that the market doesn't really think it's a systemic risk to U.S. China's been having its issues for quite a few months now. So it'll be interesting to see what China does in regards to restructuring this company and if they do step in.
Okay, and later this week, two-day Fed meeting, people worried about inflation, worried about the economy, where we're going to go from here. Maybe that this administration doesn't, necessarily isn't in touch with reality or have a grip on things. Do you think that we'll hear anything from the Fed that could reassure this market?
So I think that's a big thing we've been telling clients is Wednesday is a big deal. Okay, we think Wednesday, by then the market should hopefully start to turn around, or we could see a bigger breakdown, because I think the Fed is going to continue to kick the can down the road. And I do think they have miscalculated inflation. Inflation, without a doubt, in my opinion, is the biggest headwind for our economy that's going to hurt the consumer and discretionary spending. And we really won't feel that pain till the first half of next year. So I think this Wednesday will be the ultimate time for the market to start recovery again from this sell-off we've seen, because the Fed is going to stay very, very dovish, and this just gives them more ammunition to do that.
Yeah, you look at this market, though, and you say to yourself, we were just showing the boards for the last month, for example, all across the board, green. The Dow is up 10% in the last month. And, yearly as well, you can see the chart there. It seems like we just kept marching higher and higher. A lot of experts that I speak to say, listen, a 10% correction, it's healthy. It's not the worst thing in the world if it does happen.
Look, I agree with that. I think reset in markets is very good for the overall health of the long-term bull run. I just think coming into today, the market was already so bearish, and when you look at how big money was positioned, and in our opinion, markets usually don't have major corrections when everyone is positioned for it. So that's why we think buying the dip for the right investor in this environment is healthy. But ultimately, we're going to sell this rip rally if we get what we expect here at the end of September and going into October, because we do have some big headwinds as a country, as an economy coming over the next 6 to 12 months.
What would you buy? I mean, everything's down across the board today, especially seeing some selling in tech. Is technology an area you would focus somewhere else, perhaps?
So look, areas right now, I think you can add, again, everyone's risk tolerance is different, but certainly a great day for technology. Even the energy space, I mean, energy has gotten hammered today. I think when you're buying these dips, though, as an investor, you need to do it incrementally, because this sell-off we see today, it could last another day or two. So as you're jumping in, you don't need to jump in with both feet, incrementally add risk if you have that tolerance. And it's always, many times anyway, proven that buying fear can be very, very profitable. And that's what you're seeing right now.
Yeah, and of course, we're watching the Dow right now. The selling is actually increasing, becoming more steep as we talk, down 793 points. You saw a big spike in the VIX. That's the fear gauge on Wall Street today as well. Sometimes when fear creeps into this market, or there's a lack of confidence, which there certainly is in many areas right now, investors tend to get spooked and maybe they overdo it.
I think it's proven that they do, right? They sell on these big headline news, and we've seen the VIX have these big 1 or 2 day spikes and come right back down. I would need to see the VIX staying over 30 for a few days before I would really call an end to this bull market. So we will see over the next 2 days if the VIX gets back down to under 20. In my opinion, I think that it will, but time will tell here in the next few trading days if by this time next week we will be kicking ourselves if we didn't aggressively buy. So time will tell.
Okay. I like what you're saying about the VIX, that you have to see a trend. And I just want to point out the VIX has spiked 30% today. The number that I saw and quoted before was 19% earlier in the morning when the selling wasn't as steep. So it keeps moving up as the Dow continues to move down, now down 812 points. Eddie, always great to see you. Thanks for your time.
Thank you.